one of the greatest books that you wrote is obviously on sentiment analysis. Maybe could you just kind of explain to the viewers how traders going through this assessment could maybe use market sentiment to be able to help them achieve that 10% profit?
Sure. Well, sentiment really is twofold. When it comes to markets and trading. So one is, what a lot of people think about is the sentiment of a market, right? Like the psychological profile of a market. And right now, is a good example. We're looking at the U.S. dollar. Here we are in late November. The dollar's been soaring all month, and we're starting to see signs of maybe extreme sentiment or extreme psychological profile in the U.S. dollar against a basket of currencies. So that's one way to look at it, right? Another way to look at sentiment, and a more important way probably, is your own psychology, your own sentiment when it comes to trading, right? So it's important to understand. People say, "Oh, be emotionless when trading." That's actually not right. First of all, you're a human being, so you're going to have emotions. The key is to know those emotions, be cognizant of those emotions. So I'll give you a couple examples. Let's say you're going through a tough period of trading, right? Which is going to happen. You're going to go through tough periods of trading. It's just how it works. How do you feel, right? Are you getting anxious? Are you getting depressed, right? It's important not to over trade after that, because you're in a risky position at that point psychologically. You might want to just try to make your money back because you just lost some, right? You don't want to do that. That's just going to, compound the situation to make it worse. By the same token, let's say you're trading really well. Let's say you've had a couple really good days or a good week or whatever. At that point, ironically, that's tough too, because at that point you can get overconfident, and that's also puts you in a risky position as a trader, because then you might do something reckless or careless because you think that you know what's going on. You think you know what's going to happen next. Well, let me tell you what, the market will knock you right down. It'll give you a piece of humble pie real quick. So, it's important to know your emotions so that you can get yourself back to the center, right? You don't want to be too high. You don't want to be too low. It's going to happen, but it's important to know that so that you can then be aware of it and then get yourself back to the middle, get to that sweet spot psychologically where you can actually, trade, from an objective place, right?
Absolutely. I think you hit the nail on the head there. It's all about psychology at the end of the day. And, you just got to put a stop loss on your emotions once in a while and, breathe some fresh air, go to the park, go walk the dog, whatever. And, don't overtrade. I think that is the key. Do not overtrade.
Absolutely.
There's a lot of truth to that.